One rolling. Julia, nice to have you with us. The quarterly figures from BHP, particularly looking at that iron ore story, how are things measuring up?
Carson, I think we've seen a very solid report coming through from BHP Billiton this morning. We've seen a rise in petroleum, some strong ore numbers coming through, although the copper numbers were a little bit on the weak side. We have a look at petroleum-related products. We saw an increase of 19% there. Of course, a lot of people are going to be watching the ore numbers. In terms of production, we saw 43.4 million tonnes, but we even saw more ore being sold, 43.6 million tonnes. And I think there had been a fear in the markets that perhaps while production was strong, we could have seen sales a little bit weaker, pointing to a build-up of inventory, but there's been no signs of that at all. In fact, it looks like BHP is on track for a 5% rise in production from its WA operations. So we did see iron ore doing quite well. If we have a look at prices in iron ore, of course, we've seen a recovery up to about 114 US a tonne at the moment, and that's from a low of about 87 US a tonne back in September. What we are seeing are prices being more supported. There are signs that there is quite strong Chinese demand around at the moment, and that's because of Chinese steel mills restocking their inventories. So signs from BHP and also other miners that they're going to keep up with iron ore production, if not increase production in the coming year. We were watching coking coal, and that came out with a strong result. In fact, Queensland coal volumes were up by 20%. This one was being watched very closely given the industrial action, but of course what we saw during the period was a deal being done with unions that there would be no stop work while negotiations were taking place behind closed doors. So it does look like that's had a positive impact on coal volumes, but of course copper was a disappointment. I don't think this is going to come as too much of a surprise given Rio Tinto's results yesterday and the downgrade that they made to copper full-year forecast. We know that Escondida was closed for 17 days in July, and that really impacted on production there. But all up, BHP Billiton keeping to its full-year guidance, maintaining forecasts, and I think the market will be pretty pleased with this solid result. We've seen a rise of 1.5% for the stock out of the gates quite early.
Yeah, also, you could also argue that perhaps alongside that, there's that political risk story with Oyu Tolgoi. Do you think the market is completely on top of that one, that they're comforted by Rio's remarks in the wake of that, or where are things heading for them there?
This is a project that's about 97% complete in Mongolia, and it's a little bit disappointing to hear that the Mongolian government does want to review the ownership of this. Now, we have seen this being a potential problem in the past, and of course there is the risk associated with that. So we will be keeping an eye on this massive copper project in Mongolia, and of course if we do see ownership structures being adjusted in favour of the Mongolian government or any signs of more nationalisation, that would be a negative for this project, but for the time being we're just keeping a close eye on it. This has happened in the past before, and I guess it is just flaring up again now, so we'll be watching to see what happens there in Mongolia.
Julia, CSL in focus. It's been upgraded this morning by UBS to buy from neutral, but alongside we've also just seen news, as you've been speaking, that they're talking about a buyback, a kind of extension of a buyback, further on-market buyback up to $900 million. Profit growth targets of approximately 12% for 2012-13. The AGM is happening today, which is why we're getting some of these comments. How important are some of those aspects, and what else are you watching out for?
CSL does have its AGM, and no doubt there's going to be a lot of happy shareholders at this AGM. If I can bring up a graph of CSL shares, and this is just over the last 5 years, you can see it's been a fantastic performance, especially over the last year, where over the last 52 weeks we've seen the stock jumping by a massive 53%. Now, if we have a look at CSL as a business, they're the largest producer of blood plasma products in the therapeutic space, and I guess there had been some concerns around its business given that 32% of revenues come from Europe, but we have seen European demand holding up quite strongly. Also, they've been talking about another $900 million buyback once this current $900 million buyback is completed. So at the AGM, I guess shareholders are going to be keeping an eye out for confirmation that that extra $900 million buyback will be occurring. In August, we heard that the long-serving CEO, Dr. Brian McNamee will be stepping down at the end of the current financial year. So we'll just be watching that transition process quite closely and see if the incoming CEO will be making any comments at the annual general meeting as well. But we know that they are forecasting 12% growth on a constant currency basis, and all up, I think this is going to be a pretty smooth AGM. A lot of happy shareholders with that more than 50% increase in share price that we've seen over the past year.
Yeah, shares at over 1% as we speak to 47.22. Speaking about in ground, we need to finish what above the 45.14 level as a bullish signal. We've punched above that already in the session, but the question is, do we squander this into the afternoon or hold on to it?
I mean, we've seen some fantastic leads coming through in the US, some good economic as well as profit numbers flowing through. We saw Johnson & Johnson, Goldman Sachs beating expectations. We've seen Spain keeping away from junk status by Moody's, so positive there. We also saw a better than expected German zoo survey coming out. So business conditions do look like they were stronger than what the market expected. The market's still watching for that Spanish bailout. Bloomberg reporting that Germany is open to a precautionary credit line for Spain, and that was a big positive for markets as well. So we'll be watching that one closely. But all up, I think it's going to be a good one for the Australian share market. The key is whether we do see some volumes come back to the market. We haven't traded over that $4 billion mark all this week. So if we do see a strong rise on some strong volumes above that $4 billion mark, that would be a positive for the Aussie share market.